Warning. This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to talk a little bit about a few things. First of all, you may have noticed the disclaimers, and this is not an April Fool's joke. The FCA has dropped new regulation around financial influencers and financial content, and the one big take from it is essentially that there has to be increased risk warnings prominent throughout videos. So expect to see this more and more often from UK content creators and so-called finfluencers going forward. Seeing a great deal of people upset at the current price action from Bitcoin. Toxicity is back, so we're going to talk a little bit about that. I think if you click on a 1 month chart, what are we really doing? Absolutely nothing. Trading in a range. We do have this. Jim Cramer says there's no way Bitcoin is going to $1 million. So take that as you will. In other news, the Bitcoin hash rate has tripled since the last all-time high, despite the price remaining the same. So price is yet to follow the fundamentals. The network, of course, has never been more secure. It has never been stronger than this moment in time, which of course begs the question, is Bitcoin about to do Bitcoin things? The current dip to around 66K that we are experiencing has wiped out all of the leverage longs. And you can see that here just at the hard right edge as we traded all the way through this heat map. So with the longs cleared out, with the leverage longs cleared out, is it now time to target the leverage shorts above? This dip in Bitcoin may not yet be over, as there is still a CME gap on the Bitcoin futures chart, the CME futures chart, that sits between 63.6 and 66.5K. Tells us to keep an open mind about getting a backfill of this gap before then we can resume to the upside. Zooming out a little bit though, we are still in this parabola, okay? We are yet to violate this parabola that I'm roughly drawing here. And you can see that even a pullback all the way down to the, say, 60K level would still not violate this parabola. Again, tells us to keep an open mind about seeing higher prices walking forward. We saw another 16K or $1.2 billion worth of Bitcoin taken off of Coinbase yesterday. Remember, typically when Bitcoin is taken off of an exchange, it is to be held onto expecting higher prices. So unless we see this Bitcoin come back onto the exchange, it tells us to keep an open mind about potentially being closer to the end of this dip than the beginning. With the Bitcoin price currently hanging up around the prior all-time high level, it's important to note that historically, we don't sit here very long. You can see around 3 months, and on the third month, we broke to the upside, started a parabola. You can see here, it was the second monthly candle that thrusted us through. So again, tells us to keep an open mind about not spending too much more time before breaking out into price discovery. And in spite of this dip, okay, we are still consolidating right around the 65 to 68K resistance. Again, zooming out on these charts gives you a much better and bigger picture. It also shows you that the current dip that people are terming a crash, in the scheme of things, is really barely even noteworthy. As you can see right inside of this box, okay, price currently holding that, looking to flip it from resistance into support before potentially moving to the upside. And last but not least, we've got this from TechDev. The current price action on the right hand side is very, very similar to the run up in 2021. If history is to repeat itself, and of course it doesn't have to, it tells us that potentially what we're going to see is some kind of structure built out here before then a resumption of the primary uptrend. Warning, the following trades are for illustrative purposes only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. And so with all that said, let's hop into some charts. Okay, the dollar, the DXY, still confirming, still working on a breakout at the right-hand side. Unusually for gold, it doesn't seem to care about this strengthening dollar. It seems to be continuing its bull market. We're even starting to see silver wake up a little bit now as it looks to continue higher. The stock market is mostly flat, or was yesterday, I should say, and we are still expecting to see a pullback into a daily cycle low in the not too distant future. We're getting pretty stretched in this current daily cycle, assuming the count is right. So shouldn't be too much longer before we start to see a rollover into that daily cycle low. The same is true of the Nasdaq. The Dow Jones, we are still pushing this long, all the while we're above support. Not much more to say about that. And the Russell 2K starting to look better and better in my humble opinion. Again, still holding support, both the blue horizontal and the upper sloping red support line. And so all that leaves to deal with is Bitcoin, of course. Now, as it stands, potentially going to fire an early warning sign. Are we going to lose this upward sloping blue support line? If so, that would be a first early warning sign. It's also possible, of course, that we hold it and continue to move up. As I've been saying over and over again, all the while we're above the cycle low, then we have yet to have a failed daily cycle, and thus it's hard for me to be truly bearish in the short to medium term, all the while we're holding above that cycle low. I know I've shown this many times before, but if I grab a bars pattern like here and drag it across, I do of course wonder if what we're going to see is some kind of 60-day consolidation cycle, some structure built out, which of course, given that Bitcoin undergoes 60-day cycles, would tell us to expect roughly 2 months of chop, of sideways, of wearing everyone out, of making everyone depressed, before then we can find that next 60-day cycle low around the second or third week of May, and then of course we would be looking for a resumption of the uptrend. So for me, for now, the be-all end-all again is that cycle low, right? All the while we're above the cycle low, then it tells me to expect higher prices walking forward. If of course we lose this daily cycle low back here at around 61k, then we can entertain going to plan B. For now though, I really don't have a great deal to say. I'm seeing a lot of toxicity come back into the space. I'm seeing a lot of name calling and a lot of anger and salt and spite, but that's okay, right? This is what markets do. They wear people out before they reveal their true direction. I think it's of note, whilst we are potentially entering a choppy sideways consolidation phase for Bitcoin, the crypto-related stocks may well be continuing to fire warning signs. So all the while we hold the support, the upward sloping blue support, I have no problem continuing to push this trade. The same is true of MicroStrategy, but you can see today's move is going to be right into the support for both of those. If we start to lose those supports, then again, the only way I can really deal with this is to be looking to take some off at this point and sit on the sides and wait for a new opportunity to present, a new trendline break in which we could potentially add back. We're also seeing things like Riot and Marathon suffer a little bit. That's to be expected. But again, we have our invalidation levels, right? All the while we're above the supports and we're not stopped out, the trade is valid. And the same is true of Marathon. So all the while we're above the supports, both the horizontal and the upward sloping blue support, difficult for me to be bearish. The stop is the stop for a reason. I think we are getting close to revealing the true direction. But as I said, we do have to be open to seeing a consolidation cycle for Bitcoin. That really would upset a lot of people. I think that would really wear a lot of people out. I'm seeing a lot of people on Twitter call for an ABC type correction, A, B, and then C, and that C would come down and undercut that low. If that is to be the case, then it will be, from a cycle perspective, telling me to expect further downside into that next daily cycle low rather than a 60-day consolidation cycle. There are also Elliott wave counts that allow compression into some kind of triangle, which would also fit very nicely with the 60-day consolidation cycle. So as ever, all we can really do is take it one day at a time, be open to all possible outcomes, understand that there is no predicting this market, there is only allowing the charts to present the data one day at a time and taking it from there. For now, as I keep saying over and over again, but there really is nothing else for me to say, all the while we're above the cycle low, okay, all the while we have not taken out this cycle low, then we still have a valid daily cycle. The more sideways we start to go, the more of this chop we start to do, the more it seems most probable to me that we will have to put in a 60-day consolidation cycle. And as ever, we always have to be open to the downside risk, which is, of course, that we come back down to this red upward sloping support line. This would actually be healthy from a more zoomed out perspective. We would have our first lead-in angle in red, our second lead-in angle, which would have now been built out much bigger, and that would set us up quite nicely for something much more like this before we set that third and final angle in the blow off top. Overall, I think Bob Lucas nails it, right? By zooming out and understanding where we are in the major 4-year cycle. We have two possibilities. This left translated cycle top, meaning that we are just going to continue to go into more and more berserk mode, more and more vertical climbs in a sense are coming. Or perhaps what we have to do is build out some structure, and that will give us the space to then start to emerge to be a more right translated cycle. As it stands, I still much prefer to lean on the left translated cycle as my base case. This still is yet to be invalidated as far as I can tell. But of course, as new data presents, assuming it does present and we get something more like this or a pullback in the short to medium term, then we could scratch this left translated idea off and move to the right translated. Now, as it stands, like I said, I don't think that's the base case for me. But overall, as you can see, when we zoom out, okay, very consistent 4-year cycle lows here, here, and here. And we are still quite early in this 4-year cycle. So that's it from me. I hope you found value here today. I hope you're doing well in life. And until next time, take care from me. All the best. Cheers. Bye.